And we're live. What's up, guys? It's that time of the day. NYC heavy. Isaiah was popping. All right, let's see here. We live. Spread the word, spread the word. Salute. Pablo was good. We got Lagos, Nigeria in the house. Shout out to Lagos, man. Y'all doing the most to be on. I respect the hustle. Let's see here. We are live. All right. Guys, if you have anything, any questions about your journey, mindset, psychology, any pairs you want me to look at, now is the time to go ahead and share that live and nationwide. You already know. In Mago we trust. That's love right there. All right. So, imagine I just wrapped up on the Spanish channel, on the Spanish stream here. We're about to do this in English now. So let's run it up. I have a lot of setups that I want to share with you guys. It's a lot of value, man. There's just a lot to look at. There's a lot going on. This is going to be a heavy week, guys. I would not be unprepared for this week. There's much to see and much to do. Okay. Also, guys, if we hit 100 on this stream, I'll do a nice little giveaway. We gotta crack 100 though. Nice little giveaway if we crack 100 on this one. So yeah, we're live. All right, perfect. I'm gonna go ahead and we're gonna get right into this thing. We are here. So guys, I'm gonna let you guys kind of decide how we go about breaking down different things. I mean, you can expect today, and let me what's up, guys? So we're gonna be looking at quite a few things. First and foremost, welcome everyone. We we host this session a majority of the weeks. This will be all month for sure. And the goal here is, I'm not here to teach you how to trade completely. That's not really my goal, is to give you to teach the strategy. I just want to walk you through the setups. And in the way that I walk you through the setups, I'm pretty in depth. So you can learn quite a bit just by doing this. If you are pretty new, you at least kind of see where the market's going. So if you know the basics and if you know that, then I mean you'll follow along pretty easily. If you are like brand new, then maybe watch some other videos, or if someone invited you to this, and they'll probably give you more information too. But yeah, I'm gonna go over quite a bit. So today I'm gonna be looking at, in no order yet, I'll let you guys decide the order in which we look at things. But there's crypto stuff going on, a lot of movement with Bitcoin, Hong Kong ETFs. There's indices. I see that we have some pretty nice setups setting up for NAS 100, maybe US 30 S&P. We have dollar news going on. This week, guys, we have FOMC, federal funds rate. We have these interest rates. We have the press conference. We have NFP. Man, there is a lot going on. this week. There's already setups. I see things with oil. I see things with Euro GBP. We have active gold buys going on. There's a lot going on, guys. So I want to be able to walk you guys through what's good. A lot of opportunity, great risk reward ideas. As always, we do this relaxed. We're here to just do our best, stay disciplined. Not all the trades are gonna win for sure, but that's why we have a good risk reward, and we manage and we just follow consistent risk per these ideas. So it's gonna be a good one. So let your people know. We're live today. I don't know why you wouldn't be on. Man, we should have hundreds of people on these right now. And what I will say is lock in. Eliminate distractions if you're going to be plugged in. One of the things that I realized over time, a lot of people, and myself included when I started, is I just kind of underestimated the power of this skill. And a lot of that has to do with the belief systems that we carry. A lot of it has to do with, the beliefs that we've been instilled in and what our environment might look like. But if you are going to be here, obviously if you guys are busy, you're driving, you're at work, you're at the gym, whatever, cool. I'm grateful that you're on. But if you are in in your own environment, then eliminate distractions, close the apps, maybe get some water, do your thing, and then let's just dial in, lock in, and go, into this. Like, I've been doing this, guys, for 9 years, almost 10 years now, and I think one of the biggest things is we just underestimate how great this skill is overall, not even just trading, but investing in itself. And guys, we've never lived in a better moment in the history of humanity to have power over our income, power over every single aspect of our lives. So obviously there's a lot of ways to be successful, tons of ways. But this is one of them. And so let's lock in. Now, you guys, what I want you to do is blow this chat up real quick and let me know. Where do we want to start? We can start with indices. We can start with Bitcoin. I can give you guys an idea that I'm in right now, like literally right now. We can start there. So it's up to you. You guys win. I know gold is a fan favorite. From what I'm seeing, gold is everyone just loves gold. Indices. We got indices and caps. All right. What's up, Mike? If we have 2 to 3 good setups, what would you advise on which one of them to take or take all 3? I'd say if they don't correlate, like if it's like Euro GBP and oil and indices, which is like just totally different things, take all of them. If you're looking at Euro, dollar, and GBP USD, then choose whatever setup best fits your model. Locked in. Do you see something on RJPY? I'll have to take a look at it. Let's go, Mago. What's up, Argentina? What's up, Eric? I see Connecticut. And let me know, where are you guys plugging in from, man? This is an international game. So, guys, we hit 100 on here. I'm doing a giveaway. That's all I'm saying. Sí, sigo dentro de petróleo, de oil. So, I'm in oil. So, here's what I'm going to do, guys. I'm going to walk you guys through. You guys want to see indices, so I'll show you indices first. But there's 2 things that I'm looking at right now, that I'm in right now. Just going to put that out there. What's up, Seattle? I see y'all. So, all right. Peep this. First off, it's already on here. I'm going to just give you the idea. It's already here. I don't think it's going to be very volatile right now, but it's already in front of me. And, guys, this is an idea that I think we've gone over so many times at this point. We've just been waiting for a while. So we waited for this on Thursday and Friday. For those of you that are on the private sessions, we stream every single weekday. So Monday through Friday, we're looking at New York Open and all that good stuff. So we looked at this morning too, and it did finally trigger. So we are in Euro GBP buys. I think this is like, 2.5 pips above my entry right now. And I'm looking to take this at least to this 2 risk reward, but 4 risk reward is really where I'm shooting for. And so I'm going to walk you through the entry and then the exit and everything else, right? So why get in here? Like, why am I looking to get in for this? And the steps are pretty easy. Like, one, I look to see, okay, where is there a lot of retail buys? So we see liquidity building up. Cool. We knew eventually something's going to come to take these buyers out of the game. Boom. Market sweeps the lows. Buy. Retail buyers, goodbye. Then the market just goes. We get that higher high. And I'm gonna go down a time frame so you can see it a little bit clearly. So here you have the Israel attack on Iran. That's the excuse for actually. No, that wasn't it. News event. That happened a lot, but this wasn't actually the case. So news event here liquidates retail buys. Then we get a higher high. So now we have confirmation of a uptrend. Perfect. Market pulls back, but doesn't quite get to where the market sells off from. It just misses this. And then we also don't have an explosive movement up right away. This just chops up. Range, choppiness. Eventually, Friday, we have news events, and this thing just goes flying. Cool. So we do know this has been bullish. However, some of you may be asking yourselves, why wouldn't you take this higher? Or why not take it to higher highs? This borderline gives us an equal high up here as well. Like, why cut off up here? Now, I do think this can go even higher, but let me explain why I'm looking to take a conservative exit on this. And I'm going to just walk you through this in reverse structure. So if you look at the 1 hour, this looks bullish. All right, this goes and closes above all of this. If you look at the 4 hour, what's up, Texas? Idaho, I see you. Puerto Rico, I see you. If you look at Euro GBP, oh, you're like, wow, this gets a higher high. This must be super bullish. We'll probably go and get higher and even higher. Okay. So why wouldn't you take this higher, Mike? All right. What's going on? Well, guys, when I see this, my question is always, what's the narrative? What's the purpose? Like, why is this happening? Why would price go up really quickly and then come right down that quickly? What's this thing up to? Well, let's zoom out a little bit more. What about the daily? The daily time frame. This shows us just what a day's worth of movement. So, okay, this last Monday, market flies up, starts to lose some steam, but this gets above these equal highs. So you see there's a reason price goes higher. This has to eliminate all of these retail sellers throughout January. Some imbalance. Okay. Then the next day, the price also is up here and then loses all of that momentum and comes crashing down. What about the weekly? What about the weekly? The weekly time frame shows us this eliminates all of these, fills some imbalance, and even then also just respects just these previous levels, some strong levels of reversals. And then the market comes crashing down, and this week closes extremely bearish. Well, what does a month look like? There's less than 24 hours left on the month for Euro GBP. Looks like a lot of momentum is lost here. A lot of momentum. So, in my opinion, I think that our move to these highs, right, 86 and change, I don't think the idea here was to make higher highs, bullish structure. No. I think this whole push up here was to eliminate, to trigger buyers, to capture buyers in here, and then to get sellers out of the game. That's what I think. Now, you guys let me know what you think. So could the market go higher? Yes. I think that maybe the market could even shoot up to like 86 and change, which would be over a 6.5 risk reward. I'm going to take my money at a 4R. I just prefer, I think the probabilities are pretty damn good. So I'm cool. I'm cool with this. Chilling. David, si quieres, puedes ver acabo de terminar el análisis en español. Puedes ver eso. Literalmente lo terminé ahorita. Entonces, básicamente buscando salir acá. So, and guys, I love it, man. We got people from all parts of the world, different languages. If you guys speak another language, let me know in the chat. Let me know in the chat. So, yeah, this is the idea. Euro GBP. Now, obviously, I'll leave it up to you guys to manage this how you want to. Get in where you want to. Get out where you want to. I'm not here to tell you what to do. I'm just showing you what I do, right? Risk percentage-wise, I would keep this consistent with anything else that you do. For sure. Keep it always consistent. That's Euro GBP. And now here's what I'm going to do, though, with my stop. This drop here was about 28 pips or so. So if the market, once the market reverses, if it does, because I don't know if it will, it might not, right? I can just be wrong and it doesn't go up. But if this does go up, and once it's up about 28 pips, which would actually hit our TP, our first one, then that's when I'll move my stop loss to break even. If we get a pretty aggressive move, I might do it prior to that. But for sure, if this happens, then that's what's going to happen. So there's Euro GBP. Now, I know you guys are screaming for indices. So we'll look at indices then. Someone asked, should we only stick to a specific pair if we're trying to refine the edge? Or since the nature of smart money concepts, it really would be smarter to mark up a lot of pairs, but maybe just trade one or two. As far as refining the edge from a mechanical standpoint. So, very good question. And let's dive into that. So the question was, should we only stick to a specific pair if we want to refine our edge? Or since the nature of, the approach, the strategy, would it be smarter to mark up a couple, like tons of pairs, but only trade a couple? So, here's my take. Take it or leave it. Here's what I think. I would mark up everything. Right? I would say look for the setup. Everyone trades different, but look for your setups across the board. There's going to be moments where Euro USD just doesn't give you a good setup. It could be weeks, it could be months where you just don't get the proper setup that you like. You may be trading GBP, JPY. Maybe you're like, oh, I love GJ. And then it just doesn't give you the setups. So, look, I would be practicing the process. So, like, mark it up, see what works. And the reason I'm not really married to a pair is, one, things play out at different times. Two, at least in my experience, the approach, like, it works out basically anywhere. The biggest thing that's helped me has been kind of seeing what correlates and seeing which ones have slightly better setups. Sometimes there's, with indices, the setups are really similar, but one of them is slightly more bullish. That it's lagging behind, so it's just a slightly better structure, so it won't wake you out. But yeah, I don't necessarily think being married to a pair is the important thing. But you also have to keep in mind just how you manage things. Like, can you give the right things attention? And I don't think it's hard. I think that if you use your resources, so like if you just use your alerts, once you marked it up, then just literally throw an alert on it. So if price comes back to where you would want to enter, You don't have to look at the charts all day. You already drew it up. You already know exactly where the market needs to come back to in order to get into the trade. So I would say, and especially it depends on the phase that you're in. If you're in your first year, then I mean, it's not even really about money. It's about just understanding. It's about learning. It's about being able to spot the liquidity, being able to spot the imbalances, being able to spot good structure, being able to see, oh, here's where price needs to mitigate, and seeing that over and over and over and over again, getting feedback on those things so that when the time is right, then you can go and execute. So my opinion would be, if you want to get better, analyze, draw up the different, phases of the market. Let's say you trade Wyckoff, mark it up, and then you'll know, okay, oh, here's where my entry would be, here's where my exit would be. But leverage those things, because for example, I have a student from Netherlands who, the way I guided him through his journey was, I was like, look, first let's focus on a couple things, because he was trading already. So I was like, look, let's get this down. I want you to be able to see. He already knew how to spot it. But his issue was, when he was looking at so many pairs, he was just overwhelmed. He was just trading 15 times a day. So I was like, okay, cool. We need to correct that behavior. So let's focus on trading less. Let's focus on the impulse control. So it wasn't that, hey, don't trade everything. It was like, okay, well, you're impulsive. Let's work on that. So then it was like, okay, now that you're not impulsive, it took a couple months, but now that you're not impulsive, you're extremely disciplined. Now we can open up to trading and looking at different pairs, looking at different assets, and then executing. But first, like, you kind of have to figure out where you're at in your journey. If you don't even know the strategies, if you don't know principles, then you got to learn those and you got to implement those. Then you're going to find out what are your strengths and weaknesses. If you're impulsive, if you're anxious, then yeah, you might have to dial it down and kind of like progress in specific things. But that's kind of one of the beauties of, for example, indices on small time frames. Most New York sessions, you're going to have a setup. And that's just how it goes. And then you know your schedule and you start to adapt. But I'd say, to get better, look at a lot of things, get the reps in, basically don't have any money in line on the line, so at risk. And then eventually you can start to progress. But yeah, hopefully that gives you something. What's up, Columbia? I don't think I get links here if you guys send them in here. Yeah. The problem is this, like, here's the issue though. Because I already know, man. That advice is a double-edged sword. Because some of you are going to go mark up everything everywhere all at once, and then you're not going to be able to manage a whole bunch of things at the same time. You're going to mismanage trades. The risk is going to get crazy. You're going to be in too many trades, so that now you're all emotional. So what I'll say is this. It's not about being on the charts all the time. If you're someone who you understand your technique now very well, then you can go through charts pretty quickly and find the setups. And then you just have your zones, you have your alerts, and you're done. If you're someone who has your strategy down, you probably shouldn't be on the market more than, 2 hours, to be honest. Analysis-wise, it doesn't take very much time once you're pretty experienced. Where the issue is that then now people become obsessed with the charts, and you're not losing because of your chart work. You're losing because of your trading. So many good analysts, a lot of bad traders. And that's because all of our focus goes towards the charts, and it doesn't go towards, okay, where is my weakness? Is it how I manage my stop loss? Is it revenge trading? Is it risk management? Is it, what are the things like? So that's kind of what you want to just be really transparent with yourself, be accountable on that. So if you already have a very strong foundation with your chart work, then most of your time really isn't on that. It's more about how do you set yourself up so that you're, you know, neutral, so that your impulse control is high, so that you're emotionally intelligent, and you can just execute the system that you now believe in because you put in on the work. So, yeah, hopefully that gives you guys some perspective there. And yeah, let's get back to it. Okay, so indices, and you know what's funny? Because I get to see the back end of the viewers and everything right on here, and when the charts are on, this thing goes up and goes up and goes up. I put maybe it's just my face, but as soon as I went and I put my face only, and I was going into the depth of system, approach, psychology, the views go down. And then right now I'm gonna go up the charts again. Just watch, numbers are gonna go back up. But that's just how it goes. Like, it's like the mindset, the discipline, the psychology of trading is like the leg day of the gym. People skip the most important thing every time. People just don't want to give it attention because it's harder. Because you have to be real. It's like, oh man, like this hurts. You know, like your pride, your ego gets obliterated. It is what it is. So cool. All right. Cool. We went over Euro GBP. I think I dropped it in the chat, if I'm not mistaken. Did I not drop it in the chat? Oh, I didn't. Okay, my bad. Here's the idea. So basically at entry, here is Euro GBP. All right, there you go. Cool. I have another idea that I'm already in, but I'll share that a little bit later. Those that stay will be rewarded. I'm serious. The numbers are going up again. That's so funny. Okay, we'll go into indices. So check us out. I'll zoom out a little bit and then we'll go into what's going on. So I do think we had quite a big drop with indices. Same thing happened with, I think it was gold. I think we only go up from here, really, for the most part. Like macro. Market had to come down, had to cool off a little bit. But even the way that we drop, guys, this drops to eliminate tons of retail buys. And then we fill these daily imbalances that were left behind right here. And you can tell just the way that this drops and it comes right back up. This was not meant to be down here for a long time. This is just meant to liquidate some buyers. Back up we go. So, because this, I mean, guys, like, basically, it was kind of like a reset for the year. Anyone who had bought at any point this year was up. So 2.5 weeks of aggressive dropping shook out everybody. Just buyers, adios. Especially because when they're leveraged, margin calls, like especially big drops like this. Yeah. So when we start to zoom in more, you know, we can see like prices starting to move. This is starting to work its way higher again. You know, we came back up. We filled some of this imbalance. US30 started to recover. So it's starting to work its way higher once again. Nasty Nash, what's up, bro? Yo, shout out to Nasty Nash. He actually won a giveaway last week, and instead of taking it, he forwarded me a foundation in, I think it was Indonesia, in which I donated to, which is sick. So shout out to Nasty Nash, man, pushing it forward. You know, good stuff, bro. So, anyways, US30 tanks on Thursday, fills some imbalance. It looks like it mitigates this massive sell-off. This, I think, was it was the Israel attacking Iran candle. This was the excuse to just tank indices and just run. And this is what happens, guys. Like, you have to understand, like, there's always an excuse to move money. There needs to be an excuse to move money so that it makes sense to people. And so, yeah, I mean, I think that's it's unfortunate, that warfare and just people themselves are leveraged to move money around, but that's just the nature of what happens. And us also entering and exiting these markets, we don't influence them. So, like it's happening. Take advantage, get your money back from these central banks, get your money back. It's our money anyways. Like, you got to think about it this, like, they use our money to move this money. Whatever you have in a bank account, they use it. They literally take your money. They don't need to have anything, right? It's called fractional banking. They don't need to even keep it in there. At one point, they needed to keep at least 10% of what they borrow from you. Now that number is like basically non-existent. So think about that. They borrow our money to then move these things. What are you going to do? I'd say it's our money anyways. Take it back. So, cool. Markets tank, fills in balance, recovers. We may or may not get back down here. I'm not really sure. This might have been it. Judging by the way in which we came up again, yeah, for sure. Okay. Market's been recovering really healthy for US 30. Now, the same things basically happen with other indices, and I'm going to get into this. But this is what I was waiting for today, right? Today, between NAS and S&P, I wanted to see if we were going to work our way down to here. On Friday, we saw a quick wick to the downside and price started to move on up. And between US 30, NASDAQ, and S&P, neither of them got to here. So we still might get there at some point. But what's interesting right now is what's happening and what just happened right before New York session closed. So right before New York session closed off, we got a nice upswing in volatility. So indices came rolling down to here, and this just wiped out like tons of buyers. I'm talking about a lot of buyers. And so you saw it was like a little quick flash crash. Think about this thing basically drops 160 plus points, like that. Yo, what? And then right back up. So I think we're going to see buys, but I don't know if it's going to be with US 30. I think US 30 may go lower. Why? Because I am looking at NASDAQ. Now, if you look at these two, and I'm gonna put them side by side so you guys can see them a little bit better. So it just makes more sense to you. Oh, my bad. Here is that. Here is that. NASDAQ. Okay. There we go. Okay, so look at this. We have US 30 on the left. You have NASDAQ on the right. So the market starts to tank from here. All right, 2 p.m. Central Time. This thing just melts. And it quickly recovers. And then it's slowly kind of working its way lower. You guys see that? Now you look at NAS on the right. NAS as well. Massive drop. Liquidates retail buys. All of this week's buys get liquidated. And even some of Friday's movement. And then the market just rips back up. Flying back to the upside. But when it comes up, you see NAS is still basically in the same prices. This is like really, really close. So it's holding this bullish structure a lot better. US 30 is like kind of dipping down. It's a little easier for this to drop. So as of right now, this could change. But as of right now, it looks like NAS is just in a better position in which if this were to come down, let's say during, pre-New York session or New York session, there's a good chance it's going to hold this structure and then reverse. After a nice pullback, you can just go back up from here. Whereas US30 could also do something similar, but it's one of those situations where US30 might just go down slightly below this previous low. And if your stop loss management is basically under the previous lows, then, you might run into a little bit of trouble there. And then this is those annoying situations, and I know nobody likes them, where you're like, dude, I just got wicked out for no reason. Like, what? Why? And so this is one of the things that have helped me the most with my edge, has been being aware of the correlations and just waiting. So I do think NAS is going to be a better play for now, based on how the markets look right now. In the morning, for those of you that plug in with me in the mornings on our sessions, for those of you that are members, then we'll look at this and we'll have our eyes on it. So not a big deal. But yeah, as of right now, I do think this is going to be the case. And so here's NASDAQ. S&P is in between both. So here is NAS 100. There you go. Cool. So, and for those of you guys that maybe aren't members, this is basically what I do every morning, Monday through Friday. But obviously during New York session where it's, it's lit. Ideas are happening in the moment and stuff like that. Okay, so we took on Euro GBP. We did a nice little sidebar mindset psychology stuff. Tackled on indices right now. It's lit. So, okay, gold. Because I already know y'all want gold. Actually, you know what? Let's practice patience here a little bit. Yeah, let's look at Bitcoin. Because I know y'all want gold. But let's see if you can stay patient. Hey, we're 40 out from a giveaway today. So, all right, guys. Here's what I was looking at for Bitcoin. Crypto as a whole. If I'm not mistaken, I do think we just got the Hong Kong ETF, I think it actually opened for the first time. So we got some movement, some volatility, a nice little upswing from 63 and change to 64, about 1,000 pips or so. Looks like it's pulling back down again right now. So the market does look like it pumped up a nice, from those lows, a little under 3,000 pips. I thought we were going to go a little bit higher, to be honest. But yeah, so the market's moving up pretty decent. I want to see if we trade up here a little longer. So I was looking for buys here, and I might have gone over this last week too, that I wanted to see Bitcoin get into this area and then for us to take a buy up and see how well it reacts. It's pumping up pretty strongly. So this might already be the move. If we can really hold these highs, then I feel much better about crypto moving on up. And if that's the case, this might be it. This might be the beginning before everything just starts to rip. So let's see what happens. And then ETH moved really similar, not as aggressively. Obviously, Bitcoin took a bigger pump just now. So we'll see that. I think the better indications with crypto is always looking at the total market cap and then also looking at the other total three where you're looking at altcoins and stuff like that. I'm not going to go too deep into crypto right now, but yeah, it looks like Bitcoin's going to keep on ripping for a bit. So that was just my inner little get out of the way there. But okay, so gold, right? I know you all want gold. I'm going to give you what you want. I know. We all love gold. Y'all are inching your way out. Y'all want this giveaway, huh? I can tell. So, okay. So we caught this buy on the live stream Thursday? I think it was Thursday. Yeah. Cool. So yeah, I sent out this trade idea and it was caught on the live stream. So we looked for a nice little buy setup. There's actually two. The first one just missed. So the first one we had gold here, sweep the lows, make some higher highs, market chops up quite a bit, yanks down, liquidates these retail buys, comes to this zone. I wanted this to come down a little deeper. Selfishly, I wanted a better risk reward. I'm not going to lie. Missed my entry. And then it ripped. That's cool. No big deal. From here, though, we were ready. Because anyways, this happened while I think I was asleep. Nah, I definitely did not. Nah, it was during late Asian session. But the market quickly recovers, so you can just tell this wasn't meant to make a lower low. The market quickly pulls up again, goes even higher, until it rips right back down. And this is when we were ready. Because we saw here, very intentional, orchestrated sells, rips the bottom. Then we get higher highs. Prices trading up here, nice, healthy, quick move down. Take our position here. Tighter stop loss. There's some small time frame structure right there. So we had a nice little, I think it was like a, I don't know, 75, 80 pip stop or something. And then the market, within like an hour, smacks our first exit, 3.33 risk reward. So the market's continuously moving on bullish, right? It's slowly but surely working its way higher. If you are still in the gold buys, let me know in the chat if you're still in this buy with me. Right now, I want us to at least just go and fill the rest of this like kind of imbalance that we had from this wave down. So this is where I'm looking to exit. We also saw some strong levels of support in the past here. So these can still be relative just for exits. Like I use support and resistance for exits, not really for entries. And so I still do think we're going to keep working our way higher, especially because if you guys see this, take a look at how gold, every time gold dips under 23.30, it's just not really, it's like it doesn't want to go under. Look at this. Every time under 23.30, no, let's keep going higher. Comes back again, slips under 23.30. It's like no. Again here, right? Slips under 23.30. Drops like 100 pips, and it's like, oh hell no, we're not supposed to be down here right now. Look again, I did it this morning under 23.30. It's like better not. Back up it goes. So right now, when we're looking at some movement here, I was curious about possible buys, and we saw a nice. During like 5 minutes after, maybe during New York Open, we see price rip, liquidate these buys on here. Equal lows just get bodied. This ends up making higher highs. Cool. Then what happens? From here, this is where I'm a little perplexed. I'm in a conundrum because market rips down, then we get higher highs, price gets right back to where it sold off from, and then it aggressively like goes back up. So I see something like this and I think, was this the mitigation? Did the sell position turn into a buy position right here? And so I'm like, maybe not. And when I don't have clarity, I just don't do anything, which I think is overall probably a good idea. But then I took a look at silver, our homie here, and silver really strongly went up. So it cleared the lows, doesn't quite make a higher high, pulls back, and then just rips. Absolutely catapults. So I see something like this and I'm like, oh, okay, because this is the exact same movement. 10:15 Central Time, 10:15 Central Time, and silver really rips. So I think that was the mitigation. Like that was the swap of the sell to the buy. So right now, I'm not in anything. I'm not in new gold buys. I'm in the previous gold buy. So I haven't taken a re-entry at this idea quite yet. Still in the buy from last week. So I'm just patient. More than anything, just patient, waiting it out. So if you're holding this gold still, then see if we can go and hit 23.75. So that's gold. Now I do have another trade open at the moment. If you guys are in natural gas from like a week or two ago, still working our way higher, so that's good. And then we have, we were looking for possible buys here with the peso, but we never got our lower time frame shift in momentum, so it's good. We wait because we can get reversals off of here. Actually, had forgotten about this, so, and I don't have an alert here for some reason, so good thing I checked it. But Mexican peso, I think we could see maybe a decent reversal from here. And it might happen tomorrow, guys. Like, if you're not familiar, you need to look at this right here, right now, which is, there's a lot going on. There's a lot going on. You got CAD news, New Zealand news tomorrow. Wednesday, this is the one you really want to pay attention to. So here's what I'll say is, if you don't have like textbook setups, just wait. Just wait. They're going to come. They're going to come. Wednesday might be the day that really sets the market up, because Wednesday we have USD news at 7:15 a.m. Central Time. An hour and a half later, an hour and 15 later, you'll have New York open. 15 minutes after that, you'll have a red folder, dollar news. 15 minutes after that, you'll have another red folder, dollar news. 4 hours later, you have the iconic federal funds rate. 30 minutes later, you have the press conference. Busy day on Wednesday. Plus, these interest rates, man. We've been here before. We saw June 2006 up till August 2007 of just steady interest rates there. These were different. These were 5.25. Right now we're at 5.5. We were at 5.25 for I think maybe 3 months. And then we scaled up to 5.5 here, and we've been there since July of 2023. So I can't imagine these interest rates to stay up here much longer. I think we're going to get a drop soon, and that usually will get things very interesting. So judging how crypto's looking right now, how indices are looking right now, these federal funds rate dropping to 5.25, I could see it. And that'd be the perfect excuse for this to start ripping again. You guys saw, if you see here, look at this. March 2020, we had this sitting at 1 and change, 1.25, I think. First, we had interest rates sitting at 1.75 in January 2020, right? So this is, COVID was getting prepped in 2019. And then we had an emergency. They had an emergency meeting, and they suddenly dropped interest rates. Suddenly, COVID goes down, and then they drop it massively. Right? We had under, I think, 0.25 or 0, basically. And this happened for a good time, all the way up to November 2021. Then we top out on crypto. So look at this. Basically the entire bear run starts when interest rates start to drop. Or the bull run, my bad. The bull run starts when interest rates start to drop June 2019. And I'll show you. Don't listen to me. I'll show you. Why listen to me when I can just walk you through it? So take a look at this. People are like, oh, I don't want to look at the news. So check this out. People really sleeping, man. So check this. We had Bitcoin sitting under 4K for a little bit. November 2018, quarter 4 2018, quarter 1 2019, quarter 2 2019, and then all of a sudden it starts to pump a bit here. Now right there, March 2019 going into April 2019. What's going on over here? So March 2019. Oh, look at that. March 2019, the end of these highs. Then the market starts to go down. Look at what happens with Bitcoin. July comes, and then May, all right, it's going down. It's going down. So then all of a sudden we get March 2020, this tanks. So they say, oh, hold on, drop the interest rates. And this goes up until they start to move it on up again. And then that was the end of the bull run. So we see all this go down. And then interest rates start to go up around like right here. And then this really just ends it off. So I do think that interest rates going down right now are going to be pretty bullish for the markets overall. If you look at this, like the stability of interest rates as a whole has led to all of this. This was literally 2023, stable. Like it stopped going up, and then Bitcoin's like, all right, cool, it's our turn. So just a little bit of insight, something you guys can keep in mind. Do the research yourself, dive into it, see what's up. But if that does go down, I do feel pretty bullish with crypto as for the next 6-9 months or something. So we'll see how that goes. So again, guys, there's just a lot going on. There's a lot going on with the dollar. There's a lot going on with cryptos and indices. So definitely keep yourself organized with how the market's unfolding. And then I want to walk you guys through U.S. oil. I do see some ideas cooking up here with U.S. oil. So I think y'all can check this out. So again, those of you that were live with me on Wednesday and Thursday. Actually, Tuesday we saw the market just completely melt down. Then we get a higher high all of Tuesday, Wednesday. So then by Thursday New York session, this comes down to our entry level. And so anyone that took this, you locked in, I think it was 2 risk reward up over here. And then now we have a re-entry on this idea. So right now I'm looking to see where what's going to happen. Like I took an oil buy earlier today. I think it was at like maybe like 10 a.m. or something. 10 a.m. today. And so the market's playing off of these levels already. We got one pretty decent move up. The market worked its way down again. I do think we're gonna work our way higher. So I did take an oil buy. I just saw a massive push down and followed by a higher high, bullish structure. So I am waiting for the market to get to this level before we and see if we go up from here. So I'm in an oil buy. Let's see what happens. Again, these could go down. Could end up in stop loss. And that's cool. You just got to trade the setups. That's it. I'm looking at this, and I went into smaller time frames, and you see the market come down, little push up, and then another drop. So I don't know. The moves that we saw with the market here, this wasn't quite enough for me. Same thing with this one. Another nice push up. Goes up here like 70 cents or so. So I don't think we've seen the big move. I don't think we've seen like the big reversal that would make this to invalidate buys. So that's what I'm taking right now. U.S. oil buy positions. I also still have my buy idea from over here. So in reality, it's like it's kind of a 2-for-1. It's a 2-for-1 if you were in from last week. If not, then this is the idea that you might be looking for. It would be this one right there. So here is U.S. oil. Boom. All right. So I haven't gone over the dollar pairs yet, and I'll say that there's not a lot yet for me. So there's some volatility happening right now, which is kind of interesting. Like Asian session, I don't know if it's the Hong Kong ETF or something, but there is some volatility going on right now with the dollar. Market starting to work its way down a little bit here. But with AU, for example, guys, there's just absolutely so much liquidity here that it's just actually absurd. Like, it doesn't really make a lot of sense. It's kind of disgusting. Like, the trend line buys are just excessive at this point. 1, 2, 3, 4, 5 hits already. I could see FOMC being the catalyst and just pumping the dollar, and these pairs just get gutted and then reverse. So maybe we see something like this. You know, AU is really starting to work its way further down. NZD USD as well is working its way down a little bit here. So maybe we see something like that. So yeah, AU, maybe we have a reversal in that area. I don't know if it'll be FOMC, but we are a little bit of ways from something like this. So maybe. Right, it is dropping. NZD USD similar. Something that I do see with NZD USD though is that we did kind of come down here quickly and come right back up. So it does look like we're kind of seeing some 15-minute bullish structure, maybe possible buy scenarios. So right now, you know, we're starting to see this come down. Again, there's no news event for the U.S., but there is Chinese manufacturing, and you already know. Bad news for China is usually good news for the U.S. So, or any news for China is just news for the U.S. So that's probably what we're seeing right now. Specifically, this is what's going on right now. So I do think we could possibly see buys, but with NZD USD, again, these are correlations. So could there be something else going on? And I'm looking at this drop here was on the 20th. This was Friday New York session. So this is the dollar moving down, liquidating tons of buyers here, here, and here. So EU does it similar, right? Drops aggressively, comes back up here. Okay. GU does something similar, drops aggressively, quickly rallies, keeps rallying, slight pullback, get a little reversal here, but I don't necessarily think this was the mitigation. It wasn't very strong. I think we can go down further. So I think if anything, if for this buy in particular, I think GU is a better trade. If I look at, here's where GU is, barely working its way down. Meanwhile, NZD USD is a bit more bearish. So if we're going to get reversals off of this key zone where the dollar gains strength, which pushes GU down, I think GU is going to be the one that really plays off of these areas. And we probably get a reversal like here where we've seen support before. And you kind of see how it's like a nice push down here. So we might honestly get a play like right over here. And then see this thing move on up. So GU got some potential. GBP USD. Here you have it, guys. Bang. So, yeah. That's basically what I got going on right now with dollar pairs. UCAD, not very interesting to me. None of these other it's weird. Like I feel like UCAD, USD CHF, and USD JPY, none of these are giving me any clean setups lately. Like at all. USD CHF last week had a decent setup, but it was just not. Other than that, like we got market to come down to here, played off the support, and just ran it up. But other than that, I mean, not really. So I'm patient right now. Super patient. Let's see what the market wants to do here. And see if this thing loads. Yeah. So at the moment, I'm in a... Oh, Bitcoin losing a lot of steam. So pumped and then dumped. We might go below these previous lows again. These 61.8. Oil pretty still, but I am in this U.S. oil buy. So, yeah, guys, we'll wrap it up there. We'll wrap it up there. Big thing, guys, what I'll say right now is this. We did just announce the workshops we're going to be hosting all across the U.S. So if you are in San Antonio, Dallas, Fort Worth, really anywhere in Arizona, Phoenix area, in LA, Oxnard area in California, in Seattle, Washington, or in Chicago, Illinois. We are hitting those 6 cities towards the end of May. So you guys can find the info in the description in this video, and you guys can see that. If you guys also want to see the lit ass of trailer that Neri created and edited for us, she went crazy. If you guys want to see that, it's a pretty sick hype video for the workshops, for the tour. So it's in my shorts. If you guys look at the shorts page on here on YouTube or on my Instagram, you guys can kind of see what you can expect and what the intention of that's for. Trading and crypto workshops hosted by myself, Nancy Aguilera, Mike Sotero, and Junior Munoz. And so we're excited, guys. So if you guys want to get your tickets there, then we're stoked to see you there. So check that out. It's going to be amazing. We're going to do some deep dives. We're going to get into it. So it's going to be a good time. So anyways, guys, much love. Thanks for showing up. We'll be here again next Monday as usual. Throughout the week, obviously, if you guys want to stay plugged in, then just reach out. But there's a lot. So if you guys want any other resources that I use in trading, or if you guys want to make sure you're getting any just like mindset, trading psychology stuff as well, you guys can check out my newsletter that's there. So yeah, it's lit. Peace out, guys. Much love. I will catch you on the next one.